After 6 years of trading as a swing trader, blowing up my account twice, I've learned a lot. And one of those is I built a trading indicator that perfectly helps you understand what market we're in and how to trade it. And again, I used to charge $997 for this, but I'm tired of that and I'm ready to give it to you guys for free. So if you click the link down below, I will give you free access to this for life. Anyways, let me show you how to use it and how it actually tells you what the trend is and how to make money from it. So if you're excited, press the subscribe button and let's get this party started. So if we look at this, we can just from a brief understanding try to look at what is going on here. And what we see is that when the stock is above this green line, the stock is trending higher. So if we zoom out here, we can get an overview of what is going on. First off, this middle line here is the 200-day moving average line, or whatever period we set it at. I'll show you how to adjust that here soon. But again, whatever period we adjust it at right now, it's the 200-day moving average, because I'm on the daily candles where each candle is a day and it's going back 200 periods. Not only that, the green and red lines are one expected move, or roughly one standard deviation of a move. And again, what this math and what this indicator shows us is quite simple. If the stock is above the green line, the market's momentum and strength is up. That means the market is trending up. Why do we need to know this? Well, one, we can just trade it when it's trending up, or two, we can know what strategies to look for. What a lot of YouTubers and the gurus don't tell you is that there are strategies built for each specific type of market. If you take one strategy and try to apply it in every market, it's not going to work, and that's why you lose money. So if you were trying to trade a strategy and you're not making money, it's not your fault. You just weren't told that a strategy only works in a certain market. So again, we have bullish markets, bearish markets, sideways markets. There's a strategy for each one of those. So once you know that we're above the green line and we're in a bullish market, we can look for bullish strategies like trending strategies, like breakouts, like triangle patterns, like just things like that are momentum and resistance based. Once we are below this red line, all the momentum and the strength is pointing to the downside. We are trending down. What does that mean? It means we're looking for downside plays, short plays, breakout plays under support, breaking support, things like that. That's what we are looking for. Again, in general, you can just buy when the stock crosses the green band and sell when it goes below the red band, and you'll make money. But again, you can also use this to pinpoint the best time to use different types of strategies. Okay, so now that we know that above is green and down is bearish, what does the middle mean? Well, the middle is the gray zone. That's why it's gray, right? This is where the market jumps up and down, gaps a lot overnight, and does weird things because it's neutral. There is no clear direction on the market. When there's no clear direction, it's called a sideways market. So we're inside here. You'll be looking for RSI divergent strategies. You'll be looking for MACD divergent strategies. You'll be looking for support and resistance plays. You'll be looking for sideways strategies. So now once you have this indicator, you can just follow it to trade, or you can know how to use it to look for certain positions. Not only that, we can come in here to the settings and change the length. So let's say we change it from a 200 to a 50. Now we have a more adaptive approach, so we can see once it breaks out of a certain range that it's going to start returning back, right? You can see here it breaks above, it comes down, it breaks to the bottom, it bounces. So now we can also use this in another way to predict tops and bottoms. So now we can buy the bounces, sell the dip, sell the rips, all that different things we can do when we shorten up the time frame. What I found that I like best is sticking with the 200 period moving average. Let's go here to settings. Sticking with the 200 period and staying there because it's a great assessment of trend, but instead coming here and adjusting the time period. So for instance, the daily chart will show us the long-term trend, but if we want to see a shorter-term trend, we can go to the hour. And now we can see short-term trends. We can even move down even shorter to 5 minutes, 15 minutes, whatever. And now we can see intraday trends and intraday plays. You can see here the market gapped down, closed below this red line, and then stayed below it and trended down all the way, which is a great short play. So if you're buying options, naked options, there's a great strategy to do. Stocks, credit spreads, whatever. This is the best way to determine trend. Now, let's talk about credit spread trading, because that's my people, that's my audience, that's what I do. This is built for you as a credit spread trader. I just wanted to highlight this is a trend following system that can be applied with anything, but this right here specifically is built for credit spread traders. Why? Because if you go into the settings, you can see here that there's this thing that says show credit spread recommendation. You can set the out of percentage that you want, which I'll explain here in a second, but you simply set that, and now it tells you based on the trend, again, like uptrend, downtrend, sideways, what type of credit spread to enter and what your level should be. Now, again, this is not back tested. This is not promised. This won't always make you money, but it's a good idea of what to look for credit spreads. So again, remember, if you want to put on credit spreads, you want to do so in a very specific way, okay? So if the market is trending up above this green line in general, you want your percentage out of the money to be 2 to 2.5%. If it's below the red line, you want it to be above or out of the market about 2 to 2.5%. Now, when you're in the middle, when a lot can happen, you want to give yourself some more room. So stick to 3.5%. Again, these are just general rules to help you put on better credit spread trades. And again, it shows you the levels right here based on the, as you can see here, the percentage out of the money level that you set. Anyways, guys, I hope this helps you identify trending markets, know what to do, and also if you're a credit spread trader, put on credit spreads. Also, if you're a credit spread trader, click the first link down below, and I'll give you free access to my credit spreads trading course. That's right, I give you guys a lot of stuff for free, and all I ask is that you press subscribe and share this video with your friends. All right, guys, I'll see you in the next video.